morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, November 9th. And all I could say is, wow, congratulations to Donald Trump winning the presidential bid. Pretty amazing stuff. Pretty amazing stuff. Well, I have to say, and I mentioned this a couple times, that I wouldn't rule Donald Trump out because the polls were so close. And I mentioned, the secret voters, in a sense, meaning the non-vocal voters of who was going to vote, Trump or Clinton. And I'll tell you, the American people have spoken. They're sick and tired of the Clinton era. They're sick and tired of what's going on in Congress, and hopefully Donald Trump can change things around. Again, not my view, just basically what has happened with the presidential election, because obviously everybody was voting for Clinton, it seemed anyway. But I think it might be a good thing to stir the pot up here. I mean, this is enough. 8 years of just of torture, and who wants another Clinton in office? Especially what has transpired with her history and background. But again, nonetheless, that's not me. Just talking in general of what we've seen. Let's talk about the markets now. Futures crazy night last night, and that's why I always mention coming into a risk event. Even yesterday, you have a big event happening. Anything could happen during the day while you're trading. That election day itself, something could happen. Somebody could say something. Early voters coming in. I mean, it's not worth risking capital coming into a major risk event. Just like the Brexit vote, if you look at that, it's the same thing. We were down to in the ES down to 2023. I was up watching this, and it was just insane. Rallied back well off its lows, but was still down almost 50 handles. And this is just insane. And we mentioned, I think both presidents, if either one of the presidents were to win, the Clinton president bid, I think that market would have priced it in. And it did. It was just about 90% priced in. That's what a lot of other people are talking about. So I think a day or two of digesting, I think the markets would have sold off. Or if Donald Trump got in, markets do not like uncertainty. Markets sold off, and sure enough, as we got closer to what's going on with the polls and voters coming in, they really started selling it pretty hard. I mean, well off its lows. I think we're down about 20-something points, 30 points off the lows. Where do we go from here? Well, that's exciting. What I'm going to tell you is that volatility is back, and I think for the traders that know what they're doing, are going to make some very good money, and it's going to end the fourth quarter with a bang. I mean, it's going to be exciting. And I mentioned that we had 4 months of doing absolutely nothing from the summer. Well, that's going to get all taken back, and we're going to start. Markets are going to start moving. Now, what I'd like to say is keep your palates dry for now. Let the markets digest the Donald Trump move. Now, we do like to jump in a little early sometimes, right? We're bounced off the lows. The markets don't like uncertainty, so that's why the markets are selling off. So you're saying, hey, I could just jump in right away. Down 40 handles. Let's see if the markets, maybe the markets turn around and say, hey, this could be a positive for the markets. Could be a positive for Main Street. So we just don't know yet. Let's digest here going into the opening. It is early this morning while I'm recording this, but I just wanted you guys to be aware. Just take one step back, take a breather, and let the trades come to you. But there are going to be tons of great trades. And for those of you who are a little bit new, or maybe just a novice here, reduce your share size. Volatility is going to rise. There's no question about it. And the average true range expansion is going to be huge. So that means that you have to either reduce your share size to according to your trade book, meaning to your account size. You don't want to get stopped out too many times, but then also you're going to have to raise your stops wider in order for you to be in the game. All right, let's take a look at the UUP. Again, these charts here were yesterday's close. This is all going to change on the opening, but you can see here that we broke out, and I do think that by breaking out here, this beautiful bull flag, I think that the market dollar is set to at least challenge and take out these two swing highs here. All right. Next is going to be the VIX. Now, the VIX was down here, okay? VIX is back up above this band again. So I think I think personally it looks like you might get a couple of days of selling, 2 or 3 more days of selling while this gets digested, that Donald Trump has won the presidential bid. So I think you could see easy on the VXX $45. I think you could see in the next coming days and weeks. Not straight up, but it's possible. If there's a lot of fear that has crept up to the markets and now everybody wants out, remember there's a ton of longs, and may I add, there's a ton of shorts in the VIX, ton of shorts that's ever been created. This instrument has been created in history. the VIX, and all of the instruments are short volatility, meaning that everybody wants to short the VIX, thinking that the market's going to go higher. Now that could happen, but the way things are looking right now, I think that a lot of these are going to cover today. So just keep an eye on the VIX. All right, gold up $32 from the presidential bid of Donald Trump. Wow, $32. Now, we were looking for lower prices. Remember, news trumps the charts. Anything could happen here. Okay, now we have a big push up. Now, can gold go higher? Absolutely could go higher. But based on a presidential bid, I wouldn't look to buy it to go challenge the highs. I just don't see it yet. I would wait almost on every asset class, unless you're day trading. That's another thing. But if you're looking to build a position in something, you're going to have to give it a 3 to 5 day rule. Easy. Before you start looking to build positions into anything, because you really don't know how the markets are going to react. All right, now here's UWTI. Here's that gold. The tripled for oil, crude oil. And crude oil is up nicely. Crude oil is up about 30 cents. So this is the low here. This is their support level that needs to hold. And then we'll see if we get a little bit of a pop to the upside. All right. And here is that gold. Excuse me. There's the gold trade again. Here's GDX. Again, this is all going to change this morning because we had a major movement last night. Gold's going to be GDX will probably come in and fill that void again where we did, and at least challenge that area here in GDX. Okay, next is going to be GLD. Again, GLD, gold is up $32. GLD should be at least gap up big into this area of resistance. But again, now you have a lot of resistance to play here. Look at the volume profile, right? So you have a lot of work to do. Spiders, and let me just check real quick. All right, spiders are down to 209. So right off the bat, when we're at 214 and change the high, we're back to 209 now threatening this number one area of support. All right, it was broken, and this to me, and I mentioned, right, I said this looks like to me this is a a bearish rising wedge that has broken down. Here's the flagpole, and then here is your flag, and that's normal for a bearish rising wedge to back test lower trendline support and then start to break down. Okay, so this could be playing out real nicely, guys. Okay, so now spiders are down to 209. So that's right in that area. Looking for that breakdown again at 210.50. 210.50 we get lost, and then we start really shaking out a lot of the longs, getting down to the 38% retracement. But ultimately, it's going to be that gap fill area here at 203, and then ultimately 200, and then a 208.55. Okay, that's the bigger target at 208.55. 60-minute spiders. Just wanted to show you what we had here. Again, this is all going to change today on the opening. Transports up, had an inside day from the previous day, but again, transport should be down pretty big, back below this area, and then we'll see where this goes. Again, guys, this is all going to change right now. And then I just want to get you guys a quote in the IWM. All right, IWM trading at 116.14, so we're right in between here, targets 1 and 2. Big move, and this is all these gap areas that are going to be filled today. They are all going to be filled, and then now we see where we go from here is really going to be the question for the markets tomorrow and of course Friday and moving forward into next week. But it's going to be a very, very exciting end of the fourth quarter. Lastly, let me just get you a quote on the Q so we could just put it out there on the charts. Okay, 114.10. So 114.10 is just above there. So yep, we're going to close in. We're going to fill all of those gaps from the last 2 days of trading, and then we'll see where we go from here. It's going to be really exciting stuff, guys. Be careful. Remember, the volatility is going to expand. It's going to pick up. But remember, volatility creates what? Opportunity for all of us, all right? Have a great day, everybody. We'll see you tomorrow.